Hi, Larry Gaines, Power Cycle Trading. Well, my favorite directional trade setup is what we call the volatility compression squeeze. And one way that we find this is we have a scanner that scans for this kind of chart pattern. So here's one that we set up based on looking at it yesterday for a breakout, and this was on Tesla. So you can see it did trigger. So here's TD meaning trigger, and it just triggered out of a volatility squeeze. So let's take a look and see what that volatility squeeze compression looks like. So this setup was done yesterday. So you can see this is our volatility squeeze indicator. So you can see these dots. That represents when a squeeze starts based on the formula that we've coded into this trading model. So, and it's then color coded green. So that shows momentum based on a momentum indicator that we have it linked to. So yesterday we were looking at this. It was in a volatility squeeze, and it was starting to break above these prior highs. So we had an opening range breakout. This is our opening range indicator over here. So this was a great entry setup right here. And then pushing through the 200-day moving average gave it that potential to move up here to this target zone. So we were targeting right here 339, 340, and that was kind of our initial profit take target right here, first target. And then the second target would be 350 and then up to 360. So a couple different ways you could have traded this. One trade setup was to do it as a put ratio butterfly. So we were set this up for a target of 330, thinking that it could blow through it. So we did it as a put ratio butterfly and received a credit. And I'll show you what that looks like. So the trade setup was based on that directional breakout, and we were targeting at least 330 as kind of a minimum target. But if it exploded through 330, went up there to 339, 340, we wanted to be able to still take or make profits. So this was what we call a ninja ratio credit spread, or a put ratio butterfly. So this was then setting up to buy the 332.5, 330 put, and then selling another two of the 330, 327 puts as a bull put credit spread. So it's a ratio butterfly 1x3x2. Set it up yesterday on Monday at 95-cent credit, and you can see today it's at 25-cent credit, so it's got $70 per spread profit. And if we have a close above this target price of 330 or 332.5, this max profit will be the credit received of 95. If it was to go out at 330, our initial target, then this would have a profit of over 300. I hope this helps, and I'll talk to you on my next video.